Hello friends, welcome to the video book summary of Let's Talk Money by Monika Halan. I'm Annie, the voice behind this StoryNest video book, a leader, motivational speaker, consultant and author, driven by an unshakable love for books and storytelling. Over the years, I've empowered countless businesses to discover their unique voice, craft compelling stories, and transform them into unforgettable brands that inspire trust, loyalty, and growth. Why this book matters. It turns personal finance from confusing to doable with a simple, repeatable money system. You learn how to separate income, spending, and investing, so money stops disappearing. It shows how to build an emergency fund first, then invest with clarity using time buckets, 2 to 3 years, 3 to 7 years, 7 years plus. It demystifies debt, equity, and real assets so you can pick the right mix, without jargon or hype. Result: less anxiety, more control, and a plan you can run on autopilot. Who should listen? Busy professionals who want a no-nonsense framework to manage money. Freelancers and entrepreneurs dealing with irregular cash flows. Young earners starting out and families juggling multiple goals: home, college, retirement. Anyone who feels, I'm bad with money, and wants calm, step-by-step guidance. This summary is perfect. For listeners seeking a clear narrated walkthrough they can implement today. People who prefer practical checklists over theory, 3 accounts, goal buckets, product tests. Those needing a refresher on investing basics without charts or trading noise. Anyone building a financial routine that survives real life, bills, surprises, and emotions. About the author. Monika Halan is a respected Indian personal finance expert, columnist, and educator known for making money management simple and consumer first. Her work focuses on practical systems, investor protection, and helping everyday earners make smart, low-stress decisions. Let's Talk Money reflects her signature style, clear, empathetic, and action-oriented, so readers can build wealth without fear or confusion. If words like debt, equity, assets, and investments make your head spin, stay with me. By the end of this session, you'll see money as a simple system you can run on autopilot, without spreadsheets, without stress, and without guilt. Let's talk money, the calm, confident way. Intro. Money isn't scary. Chaos is we don't fear money. We fear confusion, bills, fares going up, guilt after a pastry, the low-grade anxiety that never ends. Here's the truth. Money becomes easy when you give it a clear place to live and a job to do. That's what we're going to build today. A simple, durable money system you can trust. Part 1. The money order. Your money box system. Picture this: one sturdy money box. Your income flows in. Essential expenses flow out. Rent, utilities, groceries, emergencies. At month's end, something is left. Most people rush this surplus into investments. Not yet. First rule: protect the downside. Before you chase returns, build an emergency buffer. Job loss, medical shock, family crisis. These moments don't send calendar invites. Your future self will thank you. Don't stash that cash. The 3-account method. Monika contrasts 2 friends. One spontaneous, one methodical. Most of us are like the spontaneous one. Money comes in, then disappears. Not because we're careless, but because there's no system. Here's the fix that actually works in real life. 1. Income account, where your salary earnings land. 2. Spend it account, for monthly expenses, bills, groceries, transport. 3rd. Invested account, for savings and investments, after expenses. Why this works? Names create identity. Identity creates friction. When money is labeled invested, your brain resists pulling it back for impulse buys. Behavioral economists call this mental accounting. It turns willpower into a system. How to run it. 3-month trial. Salary hits income. Move your planned expenses to spend it, immediately. Move the remainder to invest it, immediately. Go fully online so you don't feel the cash. Observe. Are you moving too much to spend it? Too little? Adjust monthly. Golden rule. Never pull from invest it back to spend it. You'll be shocked by how small purchases add up and how much you can actually save once money has a job and a home. Part 2. Finally, we're investing without fear. Many avoid investing because it looks like a chaotic trading floor, charts flying, people shouting. That's trading. You're not a trader. You're an investor with a purpose. Start with purpose. not how much. Don't begin with how much can I invest? Begin with why. College fund in 8 to 12 years. A car in 5 years. Retirement. A dream trip in 2 to 3 years. When the goal is clear, your brain naturally defends that money. Again, mental accounting helps you stay the course. Time bucket. Your goals. Split your invested account into 3 simple buckets. Almost there, 2 to 3 years. Near-term goals like a home down payment or travel. In some time, 3 to 7 years, bigger mid-term goals. Far away, 7+ years. Retirement, long horizon wealth. You don't need perfect numbers, just honest estimates. Purpose plus timeline equals clarity. Part 3, jargon investing, debt, equity, real assets. Let's simplify the big 3. 1. Debt, loans you give. Surprise. When you deposit money in a bank, you're lending to the bank. In return, you get interest. Debt products generally offer lower risk, lower return. They protect stability. 2. Equity, ownership and growth. Equity means owning a piece of a business, directly via stocks or indirectly via funds. Over long periods, equities can outgrow inflation, but they swing. Equity is higher risk, higher potential return. It rewards patience and diversification. 3. Real assets, things you can touch. Gold historically holds value and often rises with inflation. But gold doesn't pay interest. You benefit mainly if price appreciates. Keep it sensible. Think about 5 to 10% of your invested pool, not your main strategy. Real estate can build wealth, but comes with big commitments. Loans, maintenance, taxes, time. Don't buy because others are buying. Buy because you can afford it. You've run the numbers, and it fits your goals and stage of life. A cautionary tale. A friend poured income and loans into a hot apartment he didn't need, chasing quick wealth and social pressure. Renovations, EMIS, collateral risk, retirement looming. Then the market cooled. Wealth is built by fit, not FOMO. Real estate works for some. It can break others. Be clinical, not emotional. Part 4. Putting it all together. Choose like a pro. Think of a buffet. A teenager loads fries and cake. A health-focused adult chooses salads and sushi. Both made a choice, but only one chose with intention. Apply that same intention to financial products. Before you buy any product, insurance, fund, bond, stock, run these 3 tests. Test 1, total cost, entry price, what am I paying now? Ongoing cost, maintenance, fees, charges, expense ratios. Exit load, penalty if I withdraw early. Test 2, expected return. Beware big absolute numbers without timelines. Invest 1 lakh rupees and get 5 lakh rupees. Over 30 years, that's approximately 5.5% per year. Not magical. Always ask, per year, after all costs, with what risk? Test 3, lock-in and liquidity. Some products lock your money, break early and you pay. Traditional plans can be hard and costly to exit. Know your liquidity needs before you sign. Rule of thumb, low return equals typically lower risk. High return always means higher risk. Align risk to your time bucket and temperament. Quick system setup, your 7-step checklist. 1. Open 3 accounts. Income, spend it, invest it. 2. Automate transfers on salary day. Income arrow spend it, bills, and income arrow invest it, savings/investments. 3. Fund your emergency buffer before chasing returns. 4. Define goals and buckets. Almost there, 2 to 3 years. In some time, 3 to 7 years. Far away, 7 years plus. 5. Diversify. Blend debt, equity, and a small slice of real assets, gold, as per goals. 6. Screen products with the 3 tests: cost, expected return, lock-in. 7. Review quarterly, not daily. Adjust spend it and invest it amounts as life changes. Micro guides, listener notes. Personal finance is a system problem, not a self-control problem. Fix the system. Online banking reduces impulse spending friction. Never drain invest it to bail out spend it. Adjust next month's allocation instead. Knowledge is protection. The less you know, the more the market taxes your confusion, in fees, penalties, and poor choices. Closing recap, make it stick. Money gets simple when you give it structure. Secure an emergency fund before investing. Invest with purpose and time buckets. Understand debt, equity, and real assets. Use each wisely. Choose products with cost, return, and lock-in in mind. Keep learning. Calm beats hype. You can do this. Start small. Start now. Run the system for 3 months and watch the fog lift. Thank you for joining me on this journey. I'm Annie, and it's been an absolute joy to bring these words to life for you. May the lessons and stories shared here continue to spark new ideas, guide your path, and inspire your growth. If you found value in this video book, please like, share, and subscribe to StoryNest VideoBooks, your home for wisdom, inspiration, and powerful storytelling. Until we meet again, stay curious, stay inspired, and never stop learning.